What's going on, ladies and gentlemen? Welcome back to the channel for another market update. Hope everybody had a lovely day. And with that being said, let's get into the TA. All right, so we just had minutes, and thank Jesus, one side is now paying for the other. Thank flipping Jesus, because at the start of this, we were just getting IV crushed. Now, I'm actually probably going to get rid of the zero data expiration right now, actually. Let's do that. I don't want these. I don't want the risk of getting crushed here. Crap, but it's just going up. What do we do? One side's up 140%, one is down 94%. Do we just take the money and run? Or is there a chance? There is the chance we keep going, but you know what? We're in the strangle for next Friday, so who even cares? That is the purpose of this. All right, get me the heck out of this right now. Get me out. Get me out. Thank Jesus. Because you know what, guys? Before that candle, guys, your boy was getting IV crushed. And if anybody else is experiencing the same thing, take it as a lesson, guys. Your boy will not be doing 0 day to expiration strangles. There's no point. All right. I literally entered the one for next Friday just because I thought like there is the chance they do trade you flat today, or there's the chance we do end up today breaks us out of this pennant on the daily time frame. All right. So, where did the top of our pennant go? I have no idea. Let's see if it does not come back. All right. So let's recreate the top of that pennant. Where was it though? That is the real question. Where was the pennant? I guess we could draw it on the 4-hour time frame. Right there. Right. I guess it would just be like that, right? Look at that, guys. Look at that. Is sexy. Look at that. We ended up coming back into the pennant. I feel like this pennant is different than the one I had on my chart literally right before I turned on the camera. All right. Well, not the camera, but I started recording. But either way, guys, I don't know what comes out of today, but it does look like you are going to be closing in the pennant if you do close where you are right now. I called out a 0 day to expiration strangle on the Twitter, and I also called out one for next Friday's expiration. Now, I'm going to explain my logic behind the next Friday's expiration. Obviously, the 0 day to expiration. The point of that one was trying to catch a move like this. Now, I did just catch the move. I did not gain nearly as much. I thought it was going to be a knee-jerk reaction. Now it looks like you had like 3 knee-jerk reactions here. You had down, up, so 4, and then you're finally getting the initial reaction. All right, I watched Kevin's live stream to pretty much get a get all the FOMC minutes data, like just pretty much everything that's going on in them on the spot. So I recommend, guys, go follow Kevin just so you can go watch his live streams. He literally will go over the news for you. All right, and there's no reason not to. All right, but yeah, guys, don't hold on to, I mean, obviously, you guys are going to be seeing this video a little later, but guys, don't risk it for the biscuit on these 0 day to expiration. It's better to have your capital, and like, all in all, guys, we just got, not going to say it was the biggest game there, not at all going to say that was the biggest game, but what I will say is, we got a sick little, 20 to 25% gain on it. Not at all the desired game, but again, that is the purpose of the Jan 13 strangle that I called out, and the logic behind that was, hey, if we do end up breaking out upwards from this pennant today, all right, the daily oscillators do suggest we have room to go to the upside. But the reason I actually entered the first portion of my Feb 3rd puts, I entered half of my desired Feb 3rd puts just now. I told you guys I was going to be putting 20K on puts no matter what. Now, I actually did not do what I told you guys, which was I was going to be entering them before. I actually just entered on one of those candles. I saw an opportunity and I took them. So I am in the Feb 3rd 380 puts. I got 25 of them so far. A little under 20K went into those bad boys. I do think those are going to be paying very well. We're going to be going over why. Like, guys, we can start falling off the cliff, or we could have the counter trend rally. It's either or, but the counter trend rally likely is not going to be something absolutely massive like I initially thought. All right, we came back up here. This is the second time we came up during our counter trend up into overbought territory up here on our 4-hour CCI here. On SPY, we have the same exact thing going on QQQ. But actually, what I noticed is, guys, we made a lower high. Okay, we have here. Let me actually position us a little better here. All right, we're just going to go along with the trend. Okay, so you got lower high, lower low, lower high, lower low, lower high, lower low. All right, but what do you have here? You have a trend change. Okay, so now you have a higher high, a higher low, higher high, the same low. I called this out yesterday. I said this opens up the possibility. Crap, I could have held. I don't care, guys. I don't care. It's okay. Your boy has FOMO all the time that he has to deal with, and that's honestly, guys, every single trader actually has FOMO all the time that they have to deal with. If this thing does go to 380, just know that the 0 day to expiration strangle will be It will be overall, it will be up 100%. Your boy will not be experiencing those games, but maybe some of you guys are risking it for the biscuit. I hope not. I really do, because that's, in my opinion, not proper trade management. And not that I'm the best at proper trade management, but I'll tell you right now, again, you would be risking your capital going to zero today, where in reality, you could have just went heavier on the Jan 13s, and it was a dub either way. All right, so we'll be going over that as well. And the gains that will be coming out of the Jan 13, guaranteed gains, by the way, if we do hit these levels. And I do think we're going to hit these levels in a hurry. But yeah, you came back up and you hit that lower high. Now, I also noticed you have a little head and shoulders pattern right here. It doesn't, like, maybe it's not a head and shoulders because it's not like a clear, you don't have a clear neckline or anything like that. But either way, you made this lower high, and you had your 4-hour oscillators all the way up there. And something else to note is your 4-hour oscillator, your 4-hour CCI and SPX was in, it was right under overbought territory down there, and you have your stochastic crossing down. RSI is at that middle ground right there, but let's actually quickly get rid of all of these drawings because it is definitely sloppy. And we can go over SPY as well. If we come over to SPY, I do believe you also had that trend change too. So you have that, higher high, all right, higher low, higher high. Oh, you came back. It is a slightly lower low, but the bodies held those wicks right there. So we could say it held. All right, but what did you do? You came back up and you do not have a higher high. Trend change. All right. Also, you came back out. You had your second fake out from this pennant. That is some sloppy drawing right there, but that is something to note. But yeah, all in all, guys, all these factors are what gave me the confidence to just pull the trigger on that. And yeah, I'm glad I pulled the trigger on him. I was down initially a little at first, but now I'm up a little bit. Yeah, all right, guys, so let's get into the daily setup, then we will resume talking about the 4-hour and the hourly. And actually, before we talk about that, let's just actually look at this. This was another factor that I was looking at, that hey, like, we can go up and make that 4-hour divergence, but the 1-hour divergence, but the 4-hour chart, again, it was looking how I just showed you guys, like, it's in overbought territory. It's like, hey, any move up, it's not going to be a big move up, which means I'm willing to risk it, okay? But I wasn't willing to risk everything I was willing to risk, because again, guys, the higher we go, okay? So the further we moved up into these levels, these resistance levels, okay? First of all, right here, again, they gave us another fake out. We've had so many fake outs at that level, guys, all right, where we're just not getting that gap fill entry. That is fine, okay? That is perfectly fine. Being a trader, you just got to know, hey, when are you going to jump the gun, all right? Or not jump the gun. When are you going to pull the trigger, all right? What is that deciding factor? I determined, hey, guys, I just had my deciding factor. But we also are going to go over, like, hey, maybe we fall into non-farm payrolls on Friday, all right? And maybe that gives us a rally. I think the last one did produce a rather massive rally, all right? And yeah, like recently, just inflation reports coming out that could, like, tell us the picture, or show us the picture that's going on with inflation. What's going, is it a hot report? Is it not? They tend to move the markets. All right. So I do think it is going to be a market mover in one direction or the other. And we're going to be going over the setup. All right. So with that being said, we're going to cover one last thing. We're going to talk about the strangle that I just entered. If you guys do want all Twitter alerts, all of my trades, all right, don't treat these as alerts. Well, I mean, if you guys want to take them, just realize, like, you are fully acknowledging, like, they're kind of your trade now too. They're my trade, all right? I called them out, but you're taking them. You have your own decision, and there you go. And if you don't treat it like this guy, I'm sorry, dude, you're not going to be successful as a trader. All right, you have to eventually, like, even if you're taking my stuff, all right, just realize you have to be learning from these videos, or like in 5 years when I might not be around. I don't know, like, maybe I will, but hey, 5 years of consistent uploads, I'll probably get bored of something, and I probably will be wealthier beyond my wildest dreams. Maybe, I don't know. But you're going to have to learn is what I'm getting at. So please just don't shoot yourself in the foot. All right. So the levels for the Jan 13 strangle. So I called it out when I was entering, and I entered the Jan 13 392 calls and the 378 puts. Currently, the 392s are going for $2 and the 378 are going for $4. They're both up and down around 30% right now. And here are the levels we need to hit by expiration to get, and I have it on the downside, because any move to the upside, the only reason the calls exist in this trade is for a knee-jerk reaction to the upside before resuming lower next week. All right. Because, like, again, The daily time frame does suggest you do have room to run. All right, you don't have to run, and we can have a $40 to $50 move down on SPY. It's happened before in this exact same condition. That's what we're going to be going over moving forward, or not moving forward, but later on in the video. But yeah, right here, guys, 369. So right here, you are break even. You're break even right here on the overall. Actually, are you break even? No. Okay. You need to get to 369, I believe, to be up 100% on the overall strangle, because it's these, and then that puts you $3. They were $300 each side. So you need to get a 300% gain on one side in order to do that. So maybe it's actually 360. Maybe I did this math wrong. I did it quick on the spot with my friend. But maybe it is 360. What is that? 366 you need to fall to before Jan 13th. All right. And we're going to be going over that. That is to get down here, this is a 4% move. Now, I did actually, I was heavily leaning. You guys know this. All right. Towards this was going to give us some upside reaction here. And I was going to be able to sell the calls in either here or here. I was going to be able to sell my calls. Now, I actually did end up getting out on the calls. I got out like literally right when we were at top. So this is around when I entered the strangle, I believe. I think it was somewhere in this chop up here. It was probably right over here. And I sold my calls because I got thrown a line. All right. I was like, I'm out of these. All right. There's no point in no. And I just kind of put that money in the strangle and then, did that. But yeah, guys, overall, we did not get that upside move that I expected. And maybe we do keep trading flat. Maybe we have another freaking day in this pennant and we really do grind until the non-farm payrolls on Friday. And then that gives us our direction. But again, if that direction is the upside, it's going to be something that fades just like this. Okay. We have several resistance here. So let's just come over here. Let's actually see. Is anything popping up over here? We don't have anything popping up over here. But yeah, coming over here. So you have your 200 moving average. So let's just go over some just briefly go over some resistance levels that if we do see some upside going over the next few days, this is where I am guaranteed loading the absolute bet on puts. All right, guys, call me risky, call me not risky. All right. I don't care. All right. I'm going to win. I'm going to win, in the long run as well. All right. And that's because, the skill set that I built here and what I demonstrate here on this channel. Yeah, guys, the further we move up into these resistance levels, the less risky this setup becomes, all right? And this is something I actually realized today, which, holy crap, gave me a hell of a, just so much confidence to pull the trigger on this bad boy. I almost bought in before, but I did end up just kind of freezing up and didn't do that. Again, just something that comes with being a trader. You're going to have these moments where it's like, hey, you have to work on them in the future. That's something I got to work on in the future. For example, I had 3 or 4 opportunities to get out of calls before they absolutely died back down. I could have played the absolute crap out of this sideways action. Guess what? I kept freezing up. I just didn't want it because I wasn't seeing my desired move. What do we got going on? Are we trading flat? We're slightly moving down. You got a triple bullish divergence on the CCI going on right there. What was I just saying? Oh yeah, guys. So the more you go up here, the less risky the setup. And here's something I realized. Guys, JP Morgan is the biggest bank, $2.8 trillion. If you look up on Google, 2.8 trillion, I think it's 2.85 trillion dollars under asset management. All right. Or in assets under management. All right. And guess what, guys? This is the biggest bank. These are the people who do move the market. Okay. All the people who say big money does control the market and small money has no way of getting ahead. Well, first of all, I call BS on that. But yeah, you are right. Big money does control the market. All right. And if the biggest money of them all is short at 4,030 on SPX, that is coming right back up here. All right, let's actually let's just put that on a chart. Okay, let's put that on a chart. We're gonna make it a big fat red line because if we do come up there, that is where, guys, I almost go all in on puts. All right, like straight up. And that's why I was saying, call me risky. I literally don't care. All right, I'm in this game to win this game, and so far, guys, I'm doing quite all right. All right, and I'm only gonna improve straight up. But yeah, guys, right here, you don't think they're going to do everything in their power to shove you down if you come up to these levels right here? If you come up to the gap fill and in between where they shorted and the 200 moving average and trend line resistance, you don't think those things are going to be a powerful just slap back down to the market and you're going to end up shooting down? Well, yeah, that's what I'm getting at. I don't think you're going, if you do get up there, you're not staying up there long. It's not happening. That's almost a guarantee. Well, Yeah, you know what? I can't say. Like, what if but again, JP Morgan is not going to let themselves get screwed. They're the people that have the capabilities of moving the markets. Okay, they're going to start with tactics up here on the charts, and they're going to scare a lot of people out of their money and probably cause an explosive, not explosive fade out like this, but if we do have a move like that that brings us up, it's going to be a move like this. All right, and then we're going to fade it out rather quickly. All right, and I'm a firm believer in that, and I do think something like this is right around the corner. All right, so with that being said, now let's officially go over all of the charts. We're going to actually start off with the weekly charts. Let's just look at what's happening. So you do still have your stochastic crossing up there. But VIX, guys, this is really our tell, okay? Why do we know fireworks are going to happen on VIX? Guys, we had the bullish Harami candlestick formation right here, and now we do have the CCI hinging up as well as the stochastic off of oversold territory. All right, and yeah, guys, the last time we saw these pictures, you saw absolute massive rises on the VIX. What do we also have? On the monthly time frame, we have the bullish Harami as well, which again is suggesting VIX is going to be moving up during the month of January. And then SPY/SPX, you have a bearish engulfing candle. When was the last time you had a bearish engulfing candle? You had that bad boy right there. You had that bad boy right there. What happened? You fell down to new lows, all right? Obviously not all-time lows, but yeah, yearly lows. You fell down to them. All right, I do think this is going to be the exact same. I think we're going to take out these lows. Most likely, going off of what we see right here, history doesn't have to repeat itself, but it does rhyme. I think it's going to be rhyming all the way down here to these lows during the month of January, which is why I have the February 3rd expiration instead of the Feb 17s. All right. I actually did not grab any Feb 17 expiration. I was going to, but I decided not to. And yeah, now I'm in Feb 3rd puts, and that's because, like, hey, the desired move, like I'm very close to the money right now. The desired move, all right, is going to, there's no point in having that extra time there is what I'm getting at, okay? I know we're not going to be stalling out, or I know we're not going to be sitting up here for too long, all right? So I know we are going to be getting those contracts and the money, and they're going to be $3,000 at lows either way. So do you want $3,000 that costed you, how much were the Feb 17s? I feel like they'd be around 1,000. Or do you want like a higher gain? All right. Why would you want, that? So that's just my thinking behind why I didn't go into the Feb 17s. So yeah, what would you want to buy for $725 per contract and have those go down to 3,000, or would you want to pay close to $1,000 per contract and have that happen? So currently, guys, the only positions I have open is I still have the Jan 20 contracts. I still have those 390s. They've been in the money for quite some time now, and they will just continue. I guess obviously I will be selling those towards that expiration. I do think we are going to be moving down into that expiration. And then I have the 25 Feb 3rd puts, and then I also have a little strangle. Now the 0 DTE strangle, I only bought 5 of each side, so luckily that played out, and I went twice as I bought 10 of each side on the other one. So it is just that added little sprinkles on top. I do I've told you guys over the past like month or two, guys, I'm trying to build up the strangle, like just playing is that its skill set in itself, like playing both sides of the trade like that, playing the volatility? I don't know, all right, but that's what I'm trying to figure out. I'm trying to figure out how I can have a money printer guaranteed on volatility days for the rest of my life. But after this bear market is over, guys, we're not going to have volatility like this, so we're going to have to adapt. All right. But yeah, guys, we get rich in the bear market, we get wealthy in the bull market. That's just how it goes. Okay. And like I said, you're still in this pennant. All right. But again, I think this line is wrong. I don't know if it's right, but I feel like it could be something like this. Maybe this was the pennant. I have no idea. All right. I guess we'll just keep it like that. But yeah. All right. So going over the daily charts, now that we've all remembered, hey, VIX is going to start spiking massively. Now that we know that, or now that we've remembered that, so even if we do get any upside action, okay, even if these Feb 3rd puts do decide to go down 50% on me, guess what, guys? I'm going to go even heavier on more Feb 3rd puts, and that is the plan, okay? I told you guys, the higher we move into these resistance levels, the better short entry it is, okay? The better that freaking setup. And guys, again, call me risky all you want. I don't care. I'm going to win. I'm going to win, and I'm documenting it all here. All right. Bet against me. I'm not going to guarantee you're going to lose, because there has been one instance throughout this time where I've been absolutely creamed, which is when I wanted to listen to this. I'll actually show you guys. For anybody new on this channel, I trolled the living crap out of myself with this. We're actually going to go to NDQ, which is, you can do NDX, NDQ, NASDAQ. All right, and that's just QQQ is an ETF of NDQ. So, but this, all in all, this is the actual indice. the index that we are watching. So now look at this. Okay, so we're gonna go back in time. All right, oh, look at that, guys. Look at that. I still have it marked. Okay, and I have not looked at it since because I got wrecked. All right, you had your close here. All right, even if you bought the exact bottom or the bottom close of the close of that week, guess what? Next 3 trading sessions, you fell 20%. All right, you come over here to the next one. Okay, the next one was 08, I believe. All right, you come over here. And guys, we are in times that I do believe a crash is going to be somewhere. So I figured, oh, dude, the crowd's going to get screwed. This is the signal that everyone's missing. And that's where my head was at. I was like, everyone's missing the signal, but I'm not missing the signal. I'm getting it. I didn't get it. You know, I didn't get it. Hang on, guys. Holy shit. Did I sell? No. Okay. I didn't sell the call side. I thought I didn't sell the put side, and I was going to be very salty, but I did sell. I just have too many open. All right. We got too many SPY contracts open. And what's it called? Thinkorswim just kind of puts them all together and does that. So I got confused. But either way, all right. So you got your close under there. All right. So you buy here. What happened next 3 weeks? You fell 26%. I did not think this time was going to be different because one of the most dangerous times, or one of the most dangerous things in trading / investing is saying this time is going to be different. Let's take this ugly line there, take that ugly line there. And look at that, guys. Look at that. All right. You had your close. Guess what, guys? You didn't. All right. You fell 5% off of those. And yeah, you never looked back. All right. You never, you made higher highs since then. All right. You actually do have this lower low here, though. So that is something to know. Well, or you held it. All right. So that is something to keep in mind. So maybe we do end up having that counter trend. We come back down. I have no idea. All right. No idea. But yeah, with that being said and all of that out the way, let's go over the daily setup. Okay. Because the daily setup, it hasn't really changed besides the oscillators have came up a decent amount here. But we're going to go over what I am looking at this as, and we can have something like this. But guess what, guys? We do not have explosions taking place. We have a whole lot of grinding because people are so freaking uncertain. So if it is going to have one... Don't do replay. If it is going to... If we're going to see a counter trend rally and it's going to be something explosive, it's going to have to be one day. It's going to have to be something like this, all right? And that is the purpose of holding the call side of the strangle, all right? Now, like, honestly, I could sell the call side of the strangle. No, I don't want to sell the call side of the strangle, all right? I'm still saying there's a decent probability, a decent chance that we do see the non-farm payrolls or something bring us up decently, and then we see it fade out, and that would give me the rest of my short entry, and it would allow me to make what is that, a couple extra grand off these? That would be pretty sexy, you know? And then you would sell the call side, and then you get to ride the put side. So my thinking behind that strangle, the one for Jan 13th, next Friday's expiration, is literally, hey guys, you get the counter trend rally, you get to sell those. Maybe you get to sell those calls up 100% because they run in the money. So now you're at like 390, 392. They run in the money. You're around 100% up on those. You get to sell those. You get to put all that money into Feb 3rd puts, and then boom, you still have the Jan 13 puts that will likely also get in the money because I do think it is going to be a rather swift move down after you do get, like, if we do get it. I don't know if we do get it, but again, it could actually just be exposed to the downside because, hey, guys, we know what the VIX is suggesting. The VIX was suggesting that this week was going to be the week. It's going to be the week that starts things off. And yeah, I think that is still what we got on the table. I don't think it is going to be missing. I think VIX isn't going to let us down is what I'm getting at, okay? But yeah, all right. So the thing I am comparing this to is, and I saw this and I kind of was like, oh shit. I kind of thought, oh shit. I think actually I talked about this in yesterday's video when I realized I had the oh shit moment, which was like, hey, you traded like this is a lot of volatility right here. We don't have nearly even close to as much there. All right. But what I want to point out is this. All right. You're right here in this trading range and you came up and you popped up and you're right here. All right. Your CCI came up to being 36, negative 36. So now we are going to go over here. What are we at right now? All right, we are at negative 46. So we are right around there. All right, we now have the room to fall. And I agree. Yeah, now we have room to fall. If we now see, like, I give it a solid probability. Like, again, I'm 50-50, actually. I'll say 50-50 because the chart still suggests, like, you can run, but the 4 hour and the 1 hour are saying, like, hey, you're probably going to cool off first before that. So maybe that's why I say we fall into the non-farm payrolls. But again, we also can just fall off a cliff. And once we do pick a direction, start falling off a cliff, which is probably going to be out of this pattern right here, which, holy crap, I didn't think it would take this long to come out of. Like, what the heck is this? This is like, how many trading sessions have we been in a damn pennant, guys? This is 11 bars. This is 2 weeks. We have traded flat, guys, which means options have gotten demolished over this 2 weeks period. You obviously could have played these moves inside the range. It was a decent range, 386 all the way down to 375, $10 range. Plenty of moves. Like I said, calls, I literally didn't take advantage of 4 pops that I could have just re-entered at support on, that I literally kept calling out to anyway. So no idea why I did. Well, I do have an idea. All right, I was down, and that's what I realized today. Right, I got out of the calls for like a decent gain there, and then I was like, oh, holy crap, I have a clear mind. I just immediately started entering the strangles, guys. I haven't had that clarity in like this whole time, probably. All right, like I was talking to my friend. I was like, holy crap, oh, this is what it's like to not freeze. Nice. That's amazing. It's an amazing feeling. But yeah, coming over to the daily time frame, all right? Like, just look at where you fell from here. You never got your pop. You had one day, now I will say you had 1.6% day here. But it's pretty similar to what we have here. You have you had a 1.8% day here. All right, you had a few pops. That's all I'm saying, and you still just traded flat. It was no 3% move to the upside. You went from lows to there. That's a 5% move. So yeah, it's not that, but you still ended up getting your little pop. You allowed oscillators to pretty much have some more room to fall. And then there you go, right? I don't think this thing is going to end immediately. I don't think we're going to have a big fall next week and then boom, oscillators form a bullish divergence. That's it. I think it's going to be something like this where we fall for the month of January, all right? I think that is going to be the case. That's what the monthly time frame suggests with that bearish engulfing candle, the bullish Harami on the VIX. So yeah, that's where I'm going to put my money. And on this channel, guys, just know, other channels might not tell you what they're doing to like with the TA, but just realize this TA is my TA and I use it to make money. I am using this skill set to literally like, yeah, this dictates where I put my money. And so I will, if you guys do want the trades that comes along with the TA that we go over here, yes, I will obviously talk about the trades and discuss the logic of the trades here in the videos. But if you guys want on the spot alerts like I did today, go check out the Twitter. All right. And I'm not going to say today's entry was good. I even said like, this is not a good entry. It is not. I'm probably being impatient here. But again, will not risk not missing this. All right, guys, I still want to make an absolute crap ton of money, even if it's not like the 300 grand that I wanted. That's amazing. 300 grand, amazing. All right, but like for my age, that would be so freaking great, and that would open up the possibility of like, hey, next year, hey, things like really take off amazingly. But either way, I'm in this for longevity, guys. I'm in here because I'm building up the skill set. I'm in here because, guys, I want to have $10 million by the age of 30. I actually want. This is my desire now. 31 million. I want to have a $31 million, $536,000 a year. So what is that? 31 mil, $536,000 a year by the time I am 30. All right, and that means I will be making $1 per second. And yeah, that's what I want, guys. That's what I want, and this is how I will get there. All right, this is exactly it. But yeah, guys, let's just look at some numbers. All right, let's even say from the lows. All right, the lows, you still. Within 10 trading sessions of 14 days, so 2 weeks, all right, $30 down, guys, $30. That's $3,000. That's us going down to lows, guys. And I think that is going to be the case. Oh, wait, guess what? This is where we bottomed at lows, guys. What if we get our little mini bounce here at lows that comes with like a bullish divergence? We get that little pop, we get to take profits, and then we get to re-short, all right? Because at the end of the day, we know DIA has to fall, and at SPY, we have this clear as day zone down here marked, all right? Yes, we have this target right here from this rising wedge. But yeah, we have DIA just still sitting up here on the weekly time frame, and it, it needs to fall with the markets, okay? If you bottom with the S&P 500 and NASDAQ, and DIA does not, or the Dow does not fall with the market, does not come close to these lows, what kind of move do you think you're really going to get? Okay, not even this explosive move that we had here, but this one right here. So you had a 16% move. Guys, you're coming back up to freaking all-time highs and breaking them. I don't think you have a case to do so. All right. So we're going lower. All right. I don't care what happens in the short term. All right. That's why, like, those Feb 3rd, Feb 17 contracts, they are meant to catch the whole move. All right. Or not the whole move, but at least like Feb 3rd, I'm going back down to lows. All right. And yeah, I do think that happens over the next like 2 weeks, maybe. I don't know. Like, again, I don't have a crystal ball, but you know what? I have like a half-assed crystal ball here on the channel, which is my skill set. All right. All right, so I think that is pretty much it. We can talk about the 4-hour time frame. You guys see, you know, oscillators are all of them. They're all, and even SPX, and SPX doesn't have after hours. And we, again, are at a point where we can sell off pretty massively. All right, just right here. And keep in mind, this was when the uptrend was starting. You still fell 8%. All right, but look at this. All right, this was in the bear market. This is, well, in the downtrend, you fell 13% when your 4-hour CCI hit up here. All right, I'm just saying, guys, you have room to now fall, but you also can rise, which is why I'm still in my strangle, all right, for Jan 13. And yeah, all right. So last thing is we are going to and actually let's look at what happened with Apple, because we talked about Apple yesterday. We had a and this is what I'm saying, guys, maybe we rise. I don't know. We now have a bullish harami on. But then again, you had well, you need the confirmation of candlesticks anyway. But yeah, guys, you formed the you have this. What is this? A quadruple bullish divergence? It's triple or quadruple bullish divergence you got going on here. And then you also have the bullish divergence on the RSI that I told you, like, hey, this is what will produce a decent sized rally in Apple. And I thought this would happen. And then we're going to end up having a decent sized rally. And that's why it still does make sense to have that counter trend. And then we come back down. I know we have CPI. I think it's on the 12th. All right. Or it's the 13th. I forgot. But either way, guys. All right. Like, what if we do end up rallying off non-farm payrolls and then CPI shows us something bad? I don't know. Or we fall into the CPI and then that, like, either way, that's going to give us some action. If we fall into it, it's probably that we're going to rise out of it, you know? But yeah, you got the bullish harami here on Apple. You didn't confirm the bearish engulfing candle. So, like, we don't have to be going lower. Tesla, I think, has the same exact thing. Yeah, you have a you have the bullish harami candlestick formation right there with the like 5 bullish divergence here on Tesla, where you have bullish divergence here and deep oversold territory on the RSI as well. Look, it just doesn't get down here. It doesn't stay down here. But then again, this, were a lot of people really expecting this? No. All right. Expect the unexpected. Downtrend. The shocks are going to be the downside, and uptrend, the shocks will be to the freaking upside. You see that? Well, guess what, guys? That's what you get. All right, that is what you get when you're in a downtrend. Now, something I'm going to leave you guys off on is our baby girl, Mara, guys. This is exactly what I was talking about, but this is kind of scary, all right? And I'm slightly in it, but not even, like, I not even freaking close to what I want, all right? But I do think we are going to have that month of red. So, and I think Bitcoin is going to be falling with the market. I think Bitcoin is going to be a precursor to when the overall market is bottoming. So say, guys, SPY gets into this range down here, and Bitcoin is down here in this range down in 10 to 14K. Guys, I'm loading the freak up on Mara, baby. I'm loading up. I'm going almost all in that bad boy. Guys, Bitcoin has fallen. It will have fallen 85% if it comes down here. I think it's 85 or 86%. And fall 81%, I think, if you come over here from highs. All right, guys. I'm just saying, guys, you have a very solid shot that this is exactly where you bottom here on Bitcoin. That was where you had your first initial pop there, and then boom, you came back down. That's where buyers stepped in there. And then this was the top of the bull market back from over here in 2019. All right, so I really do give it a very solid shot that you end up. Let's actually see, did you bounce off of 19K right here, the top of that bull market? Kind of did, all right, but it's not really a respected level, it looks like. I do think this is going to be a very respected level. All right, guys. Look at the monthly time frame. All right, you can see you don't really get down here. And so when we are down here, we got to take advantage. But then again, we didn't have a bear market going on when all this was taking place. And I guarantee in 2008, Bitcoin, if it was existing back then, I guaranteed it got wrecked. The little adoption it had, it got wrecked. And yeah, and that's why I probably did this. But either way, guys, our girl Mara, she is showing proof of concept. Like we were, well, like listen, maybe you guys didn't believe me, but this is exactly what I was saying was going to happen. And this is exactly what is taking place right now. This is, it's shorts covering. That is all this is, right? Shorts are covering. And that's the scary part, because what if shorts, well, if shorts are covering, maybe they end up coming back on it and they're here for that one. And then that caused another short squeeze. I still think there's going to be plenty of short fuel, plenty of rocket fuel for the rip up to the $20 to $30 range on Mara in a hurry, because all Bitcoin needs to do is run back up to 30 to 40K, and there you go. You got Mara, like literally right here, okay? And that is a significant gain. So whatever we get on these on this next leg down, okay? And keep in mind, guys, we are going to be, let's actually look, just so I know I'm not messing up right here. You had one. There, I guess, could be your counter trend too. I don't know the rules of it, but I'll say right now. All right, again, I'm not confident in my Elliott wave or anything. It's not like I like really chart Elliott wave, but I always I'm always looking at it. And yeah, I do eventually want to create, like, you know, like I see these other people that are like, holy shit, like how are you confidently doing that? And but I want to get to that point. Well, I'm at the point where I can confidently say things with my TA. All right, I guarantee there is going to be a point where I am like that with Elliott Wave, and then it's just going to be a factor in my TA. It's going to be a part of the skill set. But yeah, guys, all in all, Wave 2, Wave 3, I don't know if this brings you back down to lows. Maybe you get that pop, all right? Maybe that's where we'd start getting a pop there. This comes back down. So now you're here, and maybe that, so let's align that with that. Maybe you come all the way back down here, and you start forming. Maybe we get a triple bullish divergence that going on from here to there, all right? And then we get this pop. Maybe we come back up. And by the way, what are these white lines? This is just my profitability for my strangle. I will take that off for you guys, so in the next video, all right? But for now, I'm going to keep it up because mid-video. And again, we could draw this little hot dog right here. I love drawing these little hot dogs. And again, guys, please don't eat hot dogs, all right? You guys can put them in your body if you want, but I'll tell you right now, just look up how a hot dog is made and you're not going to want it. Guys, this is such a sexy looking hot dog, though. Holy crap. Should we do opposite squiggles? Yeah. Oh, yeah. Are we adding the relish, guys? We adding the relish? Oh, wait. No, I don't want to do that. We're going to make you yellow. And then we got to come over here and we got to do a new one. And then we're gonna, and that's gonna be our relish right there. Boom. All right, guys. So sexy looking hot dog right there. I'm very excited for what is about to come. And with that being said, I will catch you guys in the next video. Peace.